Well, small caps have really been in vogue, haven't they? At least to chat about. So what has been driving the recent rotation? But more importantly, can it continue? For more, Alex Crompton from Active Asset Management Group joins me now. Alex, hi, welcome to ausbiz. Thank you so much for joining us. So we are in the midst of big tech earnings in the United States. Do you think we've maybe hit peak mega caps and that's why we're seeing this rotation into small caps?
Yeah, it's a great question, Nadine. And, with the Mag 7 seemingly being the only game in town for what seems like a relatively long period of time, this has seen the broader global equities market outperform global small caps over the past 2 financial years by an annualised rate of 8.5%. But as we head into the new financial year, we've seen a reversal of this trend, with global small caps outperforming by about 6% over the month today. The catalyst for the rotation into small caps was really the release of new inflation data in the US that showed that US inflation was finally starting to decline. As we all know, inflation data in the US has been somewhat sticky through the first half, but with the latest data, this has provided confirmation that US inflation is heading back down towards the US Fed's target of 2%. And as a result, this has heightened expectations that the US will continue to start cutting rates at their September meeting. And small cap stocks have really benefited from this because they typically are more sensitive to interest rates. And whilst we think that the Magnificent Seven will continue to provide great results for long-term investors, we also think that global small caps will outperform over the next 1 to 2 years as valuations and earnings converge. We expect that central banks will ultimately be able to engineer the soft landing that we're all hoping for. And as such, we expect small caps to benefit as the cost of capital continue to fall and economic activity starts to recover.
Okay, so specifically then, how is Active AM positioned across portfolios in terms of asset allocations? Like, is the money backing up where your mouth is when it comes to global small caps? Where and how?
It is. So our portfolios remain fully invested and we're broadly neutral across most asset classes. We have a slight tilt towards international equities relative to Australian equities because we expect this will deliver higher returns to investors over the longer term. At a sub-asset class level, we have an overweight holding to both global and Australian small caps, as this is one of our highest conviction positions within the portfolio.
Okay, so how does that translate to small caps here locally? Because we did get that inflation read today at 11:30. Looks as if it's given the RBA breathing room, at least when it comes to the August meeting. So how are you allocated to small caps here?
Well, yeah, the investment rationale for global small caps is essentially the same as it is for Australian small caps, with some slight variations, but we are overweight both global and Australian small caps. And in terms of the CPI, so annual headline CPI printed in line with expectations at 3%. Trimmed mean inflation, the RBA's preferred measure of underlying price pressures, came in at 3.9%. This was slightly above the RBA's forecast of 3.8%, but below market forecast of 4%. As a result, we expect that the RBA will keep rates on hold at next week's meeting. Markets had been pricing in a 20% chance of a rate hike as of yesterday, but traders subsequently revised these expectations lower following the release of data. While a rate hike remains a potential risk, irrespective of next week's rate decision, I should say, we believe the global macroeconomic backdrop remains positive for investment markets going forward.